Hey everyone, it is Thursday, February 23rd, 2023. Welcome to TechTO Quick Takes. I'm your host, Alex Reilly, and here are today's headlines. FounderFuel returns with different backers. The feds launched the Canadian Innovation Corporation, so we'll discuss what that means for startups. Cookin cooks up 17 million to deliver different food to your door. And for our lightning round, we'll review Plum's latest $6 million round. And I'll have Alex Norman join me now to break it down. Hey.
Hey Alex, how you doing?
I'm good. How are you?
Pretty good.
Great to see you as always.
Yeah, it's storming in Toronto, but we still make this happen.
I know it's not great weather at all in Toronto. Lots of snow today and tomorrow, I was hearing. So hopefully, again, spring weather. They said it was supposed to be an early spring, so hopefully they're actually serious about that. I want to talk about the first story, so the FounderFuel news. So they're returning with some new backers. For those that might not know what this means, what is that news there? And yeah, who are those backers? We'll get into that.
Yeah, so last week that FounderFuel is returning. They're one of the older Canadian accelerators.
Mm-hmm.
They're coming back with a new cohort, but with a few twists. The new cohort is backed by Novia and Panache while being run by Real Ventures KDM. It will be open to the other two twists will be open to companies countrywide and be part hybrid, part in real life over 4 months.
And just again, to maybe go on to what I was saying earlier. So if they're not familiar with just the program and the overall history, so what is it? What does the program look like? How long has it been around?
So FounderFuel was introduced by Real Ventures in about 2011. And the idea was to provide a Canadian accelerator. So an accelerator versus an incubator, for people that don't know. Incubator is something that, hey, maybe we have an idea, we'll get people to it and incubate the company. Accelerator is like, let's take a company and accelerate it. That's the difference in names. And so not sure if it was the first Canadian accelerator, but it was probably the first one to make a dent in the ecosystem. And one that lasted for quite a while. It ran cohorts from 2011 to 2020 uninterrupted.
Right.
And it provided unique support for companies that were based in Montreal or based in Quebec, where a lot of the Quebec ecosystem came in and mentored and non-Quebecers. Like I was a mentor for several years as well.
And you said it ran until 2020. Like I'm assuming that obviously had to do with the pandemic, or were there other reasons? Why is it coming back now in 2023?
Well, so a couple things. First of all, if you look at the program, they had 100 plus companies. They've had some success. Anyone from paper and open care, I think maybe majority went through it. And part of the program was in person. So I think the reason I think they did a virtual cohort in 2020. They had to adjust on the fly like everyone else did. YC did that too.
Yeah.
And then I think they probably felt the experience wasn't as good in person, online. And
Yeah.
then Real Ventures, also from my perspective, again, I'm not sure this had anything to do with it, but Real Ventures started to go raise a new fund to support it. Because the funding came through Real Ventures and basically Real Ventures raised a fund and fund FounderFuel. And so as they were raising new capital for the new fund, they probably didn't have capital to run new cohorts. So COVID going to transition to online, and then also probably not a priority use of capital.
That would have been my assumption too, is it's probably just not going to be the same experience doing something virtually, and you're not going to get the same hands-on learning. So how did it come together this time around, and also just high level, who's participating in the program this time around?
Well, what's different is, in the past, it was run by Real, funded by Real, and they took the economics. What happened here is this came back, I actually met with Katie in November. She was talking about bringing it back. The ecosystem wants it. And she was working on it. But I think what happened, something in January triggered, Inovia and Panache stepped up to the plate, said, hey, we're Quebec-based or partially Quebec-based. We want to see this in the ecosystem. Lots of founders we're talking about, lots of mentors we're talking about. And they said, we'll fund this. And so Inovia and Panache is providing capital to be invested. Real, Katie's taking the lead, but all the Real partners are going to be involved. And I think Katie's also raising additional capital to pay for the overhead.
And why is it that Inovia and Panache are supporting the program this year, this cohort?
Well, again, I don't have exact answers for that, and actually we've reached out to them, and I think on Friday we'll have in the newsletter we'll cover their perspective on why
Yeah.
what's unique about this program, why they're supporting it, and what they can do. And if you go back to the alumni, I think I misspoke before when I said majority was, but like if you look at some of the some of the notable companies coming out of there, in the past is Benchsci, which is still going strong. Paper,
Yep.
who we've had on a couple of TechTO events, really
Yep.
big success. Sonder, who went public, Unsplash, that was acquired. So
Mhm.
I think there, if I were to guess what's going to be written, and we'll see on Friday's newsletter,
Yeah.
it's a mix of this is a good way to build an ecosystem. It's a good way to get people together, and then also it produces companies that can scale and are venture backable.
Last like couple questions as we sort of get to the end is, so since the program initially launched, obviously the ecosystem looks a lot different than it did in 2011 when it first started. So why, in your opinion, do you think a program like this is still required, and what is it bringing that the ecosystem still needs?
Well, look, the ecosystem's night and day difference from 2011.
Yep.
There's a lot more VCs, there's a lot more capital, there's a lot more people around the ecosystem, there's a lot more stuff you can do online. And there's more accelerators, more incubators. But I think, first of all, this is based in Montreal, where there's a few less than there is rest of Canada.
Mhm.
Second of all, there's a program which brings the community, brings mentors that are excited to support it. So when you have an ecosystem of stakeholders that are willing to contribute, it makes it a solid program. And I think also, um, you know, it is one thing that gives value to programs like this is that they stick around and they build a reputation by having the alumni support. And so you've got a bit more history than anyone that's just joined the ecosystem in the last few years as an incubator accelerator.
One of the things I think might impact the program is just the current market conditions. I know we've talked about this a lot and how it's impacting a lot of areas of tech. So, how do you think it's going to impact the program, and also how so will it impact it?
So I think the market conditions actually make the program more needed than it was in
Mm-hmm.
2021, right? 2021, lots of funding around. It's relatively easy to raise. It's never easy to raise. But now people are not writing checks for early stage companies. So
Mm-hmm.
here's now a program that will support 8 to 10 companies. They'll write a check. Um, I don't know what the valuations or terms are because they haven't announced them yet. But whatever they are, they'll seem more reasonable than they did in 2021. So I think this is actually a great time to bring it back. And I also think you've seen some incubators, accelerators that were entered the Canadian ecosystem the last few years pull back from Canada. So,
Yeah,
and I think there's actually, in a weird way, there's more space now for the program to return than in 2021.
interesting. Okay, I like that. And how many companies do you expect in the next cohort? What are sort of the expected deal terms from them? Anything like that?
Also, again, I think from what I've read, I think they'll do 8 to 10 companies. So let's say 8 companies, they've raised $1 million. So that's 125,000 per company. What they haven't announced is what percent of the company they get for that.
Mm-hmm.
So, um, you know, we'll find out more in the next few days, I'm sure.
And just lastly, to kind of tie everything with a bow, because we did touch on a lot of why we think it's going to be beneficial, why we think the program will thrive, why it's good that it's coming back. But what I guess is further your perspective on what this means and why there's so many takeaways from this news.
Also, over the last several years, we've seen many people in the ecosystem say that early stage capital was no longer an issue. Uh, we've had many incubators, accelerators come into the ecosystem, and a few new early stage funds enter the market. The problem, despite all this, was never truly solved. I think it's disproportionately hard to raise on favorable terms or any terms in the Canadian market. And we've seen a few of these incubators, accelerators leave the market. We've seen the Canadian startup funding system deteriorate with real out of the market. And, so I think, seeing 3 Montreal-based funds work together to restart FounderFuel is a welcome development. It
Mm-hmm.
provides another source of capital for a few select founders, and it reinvigorates the Montreal ecosystem. I think the challenge for Katie and FounderFuel in Real Ventures is that this capital provides enough for one cohort. How do they raise enough capital to run several more cohorts and make sure this is a stabilizing force in the ecosystem, which I hope they do because I would love to see it.
Right. And just because you segued perfectly into Just what I want to mention next before we go to the next headline is we are going to have some additional perspective from, as you mentioned, Anovia and Panache. We're going to have some contributors for the newsletter. So if you don't want to miss that and you want to make sure you're, hearing that perspective firsthand and getting to read that, make sure you subscribe to the TechTO newsletter at tech.org/newsletter.
Sorry to interrupt you, Alex. One more thing I'll say is that they are taking applications for the current batch, and we'll have links to it in the show notes and in the newsletter.
Yep. In the newsletter as well. Just lastly, anything you're really liking right now, Alex?
In the newsletter?
Yes.
Look, I like the Founder Fact FAQs, which we added recently. I think last week was a fun one to write about why you should do a monthly update if you're a founder. I hope other people did too.
Yeah, and also just what you should be including in these monthly update emails to investors, why they're important, who should be on that distribution list. I think it's all very important, and we'll be putting out more calls to action for questions. So frequently asked questions, we want to answer them on a fairly regular basis. So definitely keep an eye out for that. Next headline, the Canadian Innovation Corporation has just launched. So, what's the big deal? What does this mean? High level, just let's start with just what is that news high level overall?
So the federal government announced the launch of a new crown corporation, the Canadian Innovation Corporation, which we'll call the CIC for the rest of this. Just to make it easier. They said it'll have $2.6 billion in funding over the next 4 years.
And just if you hear us say CIC, that's exactly what that means. So thanks for that. And just what is a crown corporation, first of all?
Okay, and I felt, I feel silly discussing this because I think Canadians have heard the term crown corporation, but I don't know how many people have actually thought what it is or what's unique about it, because you don't really hear this outside of Commonwealth countries. A crown corporation is a wholly owned federal provincial organization that is structured like a private or independent company. Basically, the idea behind these is that the crown corporations fill a gap in the economy that a private company should fill, but is not filling, while at the same time giving the entity the chance to act without direct government influence on its action. So this is basically, you talk about the free market and how it should work well. This is basically saying, hey, the free market's not working well, and so we need to address something that we think is beneficial for the economy or for the government or for the public. And they create a corporation that's funded by the government, but it's supposed to act like a private company, but it's also independent from the government to a certain extent. Not wholly independent, but more or less independent.
Right. So it's like, obviously we know sort of high level what it is, but also, why did it matter? Why is it important? It makes sense. And speaking just about the CIC, like, what is the purpose of it specifically?
So I don't know if you ever listened to Jason or me talk about why we founded TechTO, but one of this comes out of research we did many years ago, and it showed that Canada is lagging other developed countries with productivity gains. So the CIC is actually created to solve this. What they're doing is they're supposed to help Canadian companies close the gap in investing in research and development, which hypothetically should lead to productivity gains. And it's going to do this by helping business commercialize their research and protect their intellectual property.
And it might be hard for you to answer this question, but just going to throw it out there. How will it do this?
Well, I think one is like, look, it's part of that budget's the IRAP money. So it's going to continue IRAP, I assume, which is a program that's already going on there. But otherwise, it's not clear as of yet because the CIC is not up and running. The goal is to have an entity running later this year, and it will draw inspiration from similar programs across the world. What's interesting is the CIC is explicitly not focused only on high technology, but we'll have programs to help commodity businesses and manufacturers innovate, and it'll be able to provide fundings on a project base from $500,000 to $5 million per project.
And that's a big budget. So why does it have such a large budget if it's a new crown corporation?
Well, there's a big problem. Like, again, a lot of this money comes from IRAP, which is an industrial research assistance program. So big chunk of the budget's just that being moved over to this crown corporation. Right.
And what are the takeaways for our community from this news?
Okay, so maybe this will be more editorial than takeaway.
Yeah.
If you're a startup hoping that this program impacts you in the near term, you're most likely out of luck, as we still need to see legislation passed, the entity needs to be created, and the government's hoping that is done by this year, but it'll probably take longer knowing the government. Once it's created, it will take more time to create the programs that can provide capital. So it has to actually figure out how it's going to do it. So looks like maybe it starts deploying capital this year. I don't think so. In addition, it looks like funding will be project based, which means you have to jump through hoops and make applications and qualifications and to work against whatever CIC's priorities for funding is. There's not a really great way for agile, fast moving startups to work. Lots of startups do get IRAP. I would argue it's not great. So will this help the ecosystem? This could help the ecosystem by resulting in more innovation and investment in research at the corporation level. I'm not sure. This program, I don't think, is really structured to achieve its goals in the way it's. I hate project-based applications. I think you're better off with regulations that say, here's what you have to do to qualify. Shred to a certain extent does that. I think this is just going to give more money to large Canadian companies and doesn't deal with the underlying structural issues. We have an economy that has too many oligopolies, and those oligopolies are protected by poor regulations. So if you want to get more productivity, open up to more competition now. So I don't know if that's a takeaway or what that is, but that's my opinion here.
That's your opinion, which is exactly what we're doing here. We're just sharing our opinion and perspective on the news and what's happening, essentially. So, okay, I like it. Thank you. Lastly, a couple more things we want to cover on the show. Cookin'. They've raised 17 million US to deliver different food to your door. So, bit of a different way of doing things. So, before we get into that, and I get your opinion on just from an investor perspective, what is Cookin'? First of all, might be self-explanatory, but some might not know what it is.
So it's a new Toronto-based food delivery app. How is it different from the other players in the market? It's allowing its chefs or cooks to work from home, and it's delivering home cooked meals through its app. So instead of getting something from Momofuku, you might get something from Momofuku chef that's working from home.
Interesting concept. I think it's very cool. So as an investor, in your perspective, what makes this really compelling?
So it's the usual combination of team, market, and disruption of the market. So let's start with team or founders. Cookin' was founded by Morley Ivers and Michael Bausch, who have known each other since high school and previously worked together at points.com. Morley also has co-founded the company, which was acquired, and was CEO of Fan Exchange, which was acquired by Vivid Seats when he was running the company. So from the team perspective, you got a team that the founders know each other for a while or a long time, which is what companies like, which VCs like. One of the founders has shown they can execute by getting two companies an exit. The market size, the online food delivery market is massive and growing.
Yep.
The market's estimated 430 billion USD, and I think it's growing at 13% per month. And then they're disrupting. The Cookin' is trying to enter the market basically in a legal gray zone, and by enabling chefs to work from home. The idea here is to enable chefs to have lower overhead because they're cooking out of the house. Yep. They keep lets them keep a larger percentage of the amount charged or the GMV, and cooking can be cost competitive because they can charge less for a meal because there's less overhead. So it's a win-win-win. So you've got huge market, and if this works and they disrupt the market, they don't have to capture a large percent of the market to get market share.
And as we've said before, they are entering into the market at a very good time, as you said, market size, and they are disrupting it by doing something that's different and new that we haven't seen before. Just speaking of the investor conversations, who's backing Cookin' and what they're doing?
So the round was led by Reilly with participation from Mistral Ventures and several angels. Both VCs have past investments in the restaurant industry, with Reilly having invested in 7 Shifts and Touch Bistro, and Mistral having previously invested in Ritual. So I think they know the space well, and this probably gives them confidence to make this investment.
And did they have traction by the time they raised? Were they just picking up? Is that something that still needs to happen?
Well, for most companies, it will need to happen. What's not clear to me here is when this round was closed and when it was announced. So it was just announced, I think, last week. My guess, it was raised much earlier than when it was announced. The traction they shared with announcement is impressive. 6,000 meals delivered from 62 chefs. 36% of people have reordered. They have a wait list of 1,800 chefs. Yeah. So, and they've onboarded 80. So it's some traction. Probably not as much as you'd expect from a company that's raised this much.
Right. So we talked about obviously why it would be compelling to an investor, but on the flip side, why is it risky and why would there be a huge risk with this investment?
So this is operating in a gray area. There's a lot of regulations about what you can prepare and sell from your house in the food
Mhm.
space. And, you know, technically, I think that, the chefs that are cooking from home have to abide by those rules. And there's probably a lot of other areas that aren't covered or not allowed by the law. So technically, they might be breaking the law. Uh,
Okay.
I think this is, sort of reminds you of the early or mid 2010s, Airbnb and Uber, didn't wait for regulation to just keep on expanding. And it's quite possible this works right now, but it's also
Mhm.
more possible that, you have a health issue or restaurants feel threatened. They can create a public backlash. They'll make it hard to get regulation approved and they will get shut down. Um, you know, I think the cities are much more quick to act on this than they were 7 or 8 years ago. Another
Right.
challenge is it's not clear the economics for the chef, right? Because um, it's nice as a side hustle, but if you start doing a lot of meals, do you just have to open a restaurant and then are you eligible to be on cooking? So that's a question that I don't have an answer to.
Right. And obviously, as a disruptor, we know this. It's something that's never really been tapped into before. So there's going to be risks and backlash and hoops or hurdles you'll have to jump through and over to get things across the finish line. So, an interesting call out for sure. Lastly, what are the specific takeaways, just high level from this news?
Look, large early stage rounds are still getting done in this market.
Mhm.
If you're tackling a huge problem or a huge market, you have founders who can execute or proven they can execute. Um, but the problem is a founder listening to this should not take this round and valuation as a benchmark for what they can raise in this market. There will be more announcements like this in the next year, but those will be the few that are lucky to have backing already because of what they've done. And so just you can get if you're dealing with a huge market, you can prove you can execute. You might still raise, but not at this valuation.
Right.
I'm interested to see how stakeholders react to the companies trying to disrupt
Mhm.
regulation. Like I said, the cities are much quicker to act than they were a decade ago. We saw this recently in Toronto with the banning of robots on the streets of
Yep.
Toronto, and opposed to waiting to let them overrun Toronto. Um, Finally, there's always room to disrupt the disruptors.
Yep. Yeah. Always room to disrupt the disruptors. I like it. Before we wrap things up, lightning round. I mentioned the raise earlier from Plum. So, what's the news there, and why would it be interesting specifically for anyone watching or listening?
So, as reported by BetaKit, Waterloo-based Plum raised 6 million USD, led by Pearson Ventures with participation from others. I find this interesting for a few reasons. You're hearing about the layoffs in tech. You know, so everyone thinks, okay, HR tech has naturally to slow down. But
Mhm.
if you take a look at the macro economy, it's still a very tight labor market. And what Plum does is help corporations find the best people for the roles that's best suited to them. So, what they've done is they've targeted large enterprises that have big problems. So they must be, probably still growing, and they were able to raise money for HR tech, which most people probably in the tech think is not opportunistic now. The other thing that I found very interesting is the three VCs that sort of led and participated in this round are all ed tech investors. And when I look at Plum, I didn't think of it as an ed tech, but I could see how if you're an ed tech, the future of work, how do you redeploy people? How do you get them new skills? May qualify and fit in that bucket. And these companies, these funds took a leap of faith and invested in Plum.
Right. It's an interesting call out too, because I would assume it was ed tech as well, just given what they did. But yeah, very good. So before I let you go, just quickly to like tie a bow on everything, we have lots of events upcoming, especially in the month of March. We have an International Women's Day event coming up on March 6th at 111. And we also have a TechTO special, Web3 edition So entirely focused on Web3 and everything happening in that space. And that is March 22nd. I will also include, of course, in the newsletter, you can read about all of that and what's happening. We also have profiles coming up as well to promote the speakers and who's taking the stage, but everything will be linked in the show notes, and you can find all that information on our website. Any final thoughts, Alex, before we wrap things up?
None for now. I think we've covered quite a bit.
We did.
I think the news is slower, but there's still interesting stuff going on. It's interesting the government try to tackle some of the innovation problems. It's interesting to see FounderFuel back, and I think 2023 will have more upside than people think.
I think that's a great final thought. Awesome. Thanks, Alex. If you like today's episode, don't forget to like and subscribe wherever you're watching or listening. We will be back in 2 weeks' time with a brand new episode of TechTO Quick Takes. And until then, we'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.